considered, which is 2007, the amount, express it as a percentage of the base year, which is 20x5. 510K divided by 300K, this is 170%. The correct answer is letter dog. Wala naman tayo naging problema dito, no? Number 2, this is too much liquidity. Okay, this is too much liquidity to the point that the business is not doing anything rather than keeping cash, no? Ano yun? Iiwan lang nila yung 450 million sa bangko. Ang assets nila, 700 million lang. This is more than half of the assets. Ang gagawin nila dyan, no? Maliban na lang kung this is the first year of operations, nag-uumpisa pa lang. Other than that, I do not see what this is. Why is this such a mutual fund? Anyway, this is high liquidity, but this is too much. Liquidity is defined as the ability to convert assets to cash. Kung lahat naman ay cash na or can readily be converted to cash, this is overly liquid. Letter A, high liquidity. Okay, ito yung gusto ko talagang i-review sa inyo, no? So, remember problem 3. Consider the following transactions. Okay? 1, 2, 3, 4. If a firm has a quick ratio greater than 1, which of the transactions above would cause its quick ratio to decrease? So if you can remember, I assume a figure of 3 over 2. Makinig kayo mabuti dito, ha? I assume a figure 3 over 2. Tama? Okay, because the quick ratio is greater than 1. Okay? So what's the quick ratio? The quick ratio is the ratio of quick assets to current liabilities. Ano ang kasama sa quick assets? Kasama sa quick assets yung cash, marketable securities, accounts receivable. Inventory and prepaid expenses are not current assets. Again, inventory and prepaid expenses are not quick assets. They are current assets. Correct me? They are current assets. Inventory and prepayments are current assets, but they are not quick assets. Number 1, a firm receives cash on account. So, yung AR on account, no? Yung AR naging cash. AR became cash. Quick asset to quick asset. This is no change, no? The quick ratio is still the same. AR was converted into cash. The quick ratio is still the same. Okay? Next, 2. A firm sells goods on account with COGS less than the sales price. Nawalan tayo ng inventory, but nevertheless, it's not part of the quick assets. We lost an inventory and we gained an AR. Okay? Our inventory decreased by selling, our AR increased. A firm sells good on account. Okay? So the quick assets would go up in transaction number 2. Transaction number 2, this will increase the quick ratio. Nawalan ka ng inventory, hindi naman kasama yun dito, pero nagkaroon ka ng AR. Therefore, increase. Number 3, a firm makes a payment on account. Ang ginawa kong assumption dito, piso yung AP. Accounts payable is 1 peso. So, if we're going to pay 1 peso, no? So, mawawala ng accounts payable 1 peso. Yung AR, yung cash, mababawasan, pambayad ng AP. 3 over 2, this would become, 3 over 2 would become 2 over 1. 3 over 2 is 1.5. 2 over 1 is 2. The quick ratio would go up with an equal decrease in the numerator and denominator. Nalala nyo? The ratio would behave differently if it was less than 1. Kung 2/3 lang ito, you pay an accounts payable minus 1 cash minus 1 AP. This becomes 1 over 2. From 0.66 to 1/2, that's 0.5. This is a decrease in ratio. But it is stated that the quick ratio is greater than 1. And hence, transaction 3 will be an increase. Transaction 4, a firm purchases inventory on account. You will have an inventory, which is not a quick asset, but you will have it on account. Tataas yung accounts payable mo. Your accounts payable would go up. Increase in the denominator will decrease the ratio. So the correct answer here is letter dog, 4 only. Correct answer here is letter dog, only transaction 4. Okay lang? Office company has total assets of 475K, total liab of 130K. Marami naman tumama dito, no? Maraming tumama dito. The debt to equity ratio is liab over equity, hindi liab over asset ha. Debt to equity ratio ang tinatanong, no? Debt to equity. 475 minus 130, that's your equity, 345K. 130 divided by 345, you would have 0.38 or 38%. Okay? Dito ba tayo tumigil? 38%? Hindi, dito, no? I believe we stop here. This was the last problem that we discussed, if I'm not mistaken. You are asked for the times interest earned. Times interest earned ratio is the ratio of EBIT to interest expense. We would like to know the ability of the company to pay its interest from its earnings. Okay? So we'll start with net income. Net income is after tax. Net income is after tax, 418,000. Add back income tax of 146K. Your earnings before taxes is 564,000. Add back interest, 621,000. Yan yung EBIT. Ilang beses mo kayang bayaran yung interest na 57,000? How many times can you pay the interest, which is 57,000? You have an EBIT of 621K. You have the ability to pay the interest 10.89 times. Kasi yung pambayad mo ng interest, manggagaling yan sa operating income, usually equivalent to your EBIT. 10.9 times. The times interest earned is 10.9 times. Letter C. Okay? I believe, no? Ito yung first question na hindi ko pa na-discuss. Nico Corporation. May I know everyone's answer? May I know everyone's answer? Okay. Hindi ko pala sinabi kung 360 days or 365 days. It can go either way. Pero pagdating sa ating exam, let's make a uniform assumption for convenience. Gawin natin 365 days. Okay? Anyway, multiple choice question naman. No? Pag silent, 365 days. If Nico Corporation has COGS of 300K, inventory of 30K, then the inventory turnover is blank. The average age of inventory or the days in inventory is blank. Let's start with the inventory turnover. It's COGS over inventory. Average, average kung kaya. 300K divided by 30, this is 10 times. 300,000 divided by 30, this is 10 times. Ano ang ibig sabihin ng inventory turnover na 10 times? Meron tayong inventory na 30K. Ilang inventory na 30K ang nabenta sa isang taon? 10 beses. Ilang beses nabenta yung 30K na inventory natin? 10 beses. Take note that when your inventory is sold, it will become cost of goods sold. When the inventory, which is usually carried at cost, is sold, it will become cost of goods sold. If during the year, you're able to have a total of 300,000 in COGS, okay, it means that you're able you're able to buy inventory, sell inventory. Buy inventory, sell inventory 10 times. 10 beses mo napaikot yung inventory mo sa isang taon. The faster the turnover, the higher the inventory turnover, the faster, that would be better. Okay? Yan yung inventory turnover. Days in inventory is just the reciprocal of the inventory turnover. Rather than how many times in a year, it measures how long you're holding on to inventory. 30K divided by 300K over 365. Just get the reciprocal but convert this to days para maging days in inventory. Okay? This would give you 36.5 days, 36 or 36.5 days, depending on gumamit ba kayo ng 360 or 365. Anyway, rounding issue is not a big problem with me. 36.5 days. Sana malinaw ha? 36.5 days. Sana malinaw. Okay tayo? So, yung inventory, pagbili mo, hawak mo siya ng 36.5 days bago mo mabenta. Buy inventory, hold it usually for 36.5 days, and sell. If you're going to do that 10 times, you would notice that there are 365 days in 1 year. When you multiply the ITO and the days in inventory, you would effectively arrive at the number of days in 1 year. Okay? Bilhin mo yung inventory, usually tumatagal sa'yo ng 36.5 days. Then benta mo. Bili, then benta. Kung ginagawa mo yon 10 beses, ibig sabihin yung interval ng bili at benta nasa 36.5 days. Okay? The faster, dapat the shorter the days in inventory. The faster, the shorter the days in inventory. Costlier company, return on common stockholders' equity. Everyone enter. Okay, very good. Everyone please answer. Very good. Gosler Company's net income last year was $130,000. The company paid preferred dividends of 42K, average common stockholders' equity 610K. The company's return on common stockholders' equity for the year was closest to. So only divide the net income that is attributable to the shareholders. Okay? Okay. So net income, which is attributable to common shareholders alone. So yung 130K na net income, may preferred dividends yan na 42,000. Okay? 42,000. Kukunin niya sa 130. Kukunin ng company yung 42K sa 130. So you're going to remove 42 from 130. Naka-average shareholders equity na. No problem here. 610K. So that would give you 14.43%. Correct answer is 14.4% or 43%. No? Depende sa round off. Anyway, MCQ tayo. You would know the right answer. Okay? So since the denominator is only the common shareholders' equity, The net income should be one that is attributable to the denominator only. Next question. Element Corporation has ROE of 10%, ROA of 7%. The average financial leverage index for Elements industry is 1.25. Which of the following statements is true? Go. Okay, to appreciate this issue, this case here, you need to be aware of the Dupont equation. You need to be aware of the Dupont equation. Most of you answered C and dog, no? It's a battle between C and dog because the answer is 143. Okay yung calculations nyo. But the interpretation, dyan kayo nadadali. So medyo hati yung sagot, C or dog. Let me explain why the answer is dog. According to the Dupont equation, ROE is equal to profit margin times asset turnover times the equity multiplier, aka financial leverage index. Okay? Another name for this is equity multiplier or financial leverage index. Okay lang tayo? Sige. So if you're going to do this mathematically, you would notice that this is nothing unique. ROE is equal to profit over sales, sales over assets times assets over equity. Yan yung equity multiplier natin. We may cancel out the sales here, the assets here, leaving you profit over equity, which is the ROE formula. Okay? Now, you know that the ROA, you know that the ROA is the first two terms, profit over sales, sales over asset. Kung tatanggalin nyo yung sales, profit over asset yan. If you are going to combine these two only, that's your ROA. No? That is your ROA. So if you will combine this and this, that is your ROA, which is 7%. The return on total assets, 7%. The return on common equity, 10%. Okay? So 7% times the FLI, you will have 10%. Therefore, the FLI is 1.43. No doubt about that, no? C or dog yung naging sagot ninyo. Now, in the video discussion on solvency, I told you that debt is dangerous to the health of the company. Okay? Ang pagpapautang ay pwedeng ikakasama or ikakasara ng negosyo. Debt can mean the death of the company when not properly utilized. However, diniscuss ko naman sa leverage that by using debt, a small increase in your EBIT can mean more increases in your earnings per share, percentage-wise. A small percentage change in EBIT can mean a higher percentage change in EPS if you're able to use debt. In the case of the Dupont equation, the use of debt is something good here, or at least it is just interpreted. No? The interpretation of the Dupont equation here is that you're able to maximize the use of debt. Yung utang kasi, parang ang nangyayari, ginagamit mo yung pera ng iba. Magandang bagay yon dahil binabayaran mo sila ng maliit na interest, pinagkakakitaan mo yung pera nila. So, the higher the financial leverage index, the higher your ROE will be. Kasi minumultiply ito. Paano dumami ang utang mo? If you have more assets for a small amount of equity. More assets for a small amount of equity means you have a lot of debt. So the use of debt here is about leverage, using other people's money to earn for yourself. The higher the financial leverage index, asset over equity, the higher your ROE will be. Kaya ito tinatawag na equity multiplier. Okay tayo? Kaya ito tinatawag na equity multiplier. Any questions on the FLI? No questions? Okay, then we shall proceed to question number 9. The blank ratio is commonly used to assess the owner's appraisal of the share value. Enter your answers, please. Enter your answers, please. To appraise the value of the stocks, you would need a multiplier. Okay? You will need, a multiple, the multiplier. To appraise the value of the share, you need a multiple. Hindi multiplier, multiple. Okay? An example of a multiple is price to earnings ratio. This is the ratio of the stock price, the amount by which shareholders are willing to pay, to the earnings per share. For those who were my students 2 semesters ago, I have a full video discussing how to conduct relative valuation if you're really interested on how this works. Okay? To price to earnings ratio. Anyway, the last question, question number 10, is about the application, how we appraise share value using the PE ratio. The BOD of MAT Corporation is planning to make a big acquisition in the next fiscal year. The company hired an M&A consultant to conduct a financial feasibility study using what ifs. The consultant and the company's financial analysts have developed the following data table for the 4 top target companies from the pre-final list. Based on the data table, which of the following target companies is the best company to acquire using the PE ratio as the criteria? Okay. May I know your answers here? May I know your answers here? Meron na, no? Okay, marami sa inyo sumagot ng boy. Okay? Marami sa inyo sumagot ng boy. So let's look at the ano to? Ano to? Stock price to ha. Okay. Let's look at the SP, the stock price of each target company. 40, 50, 45, and 56. Sino sa kanila yung masasabi natin mura yung company? No? For the sake of this discussion, we are going to assume that each company is identical. Each of the target companies here are exactly the same. Ang question na lang dito ay sino yung mas mura? You cannot compare stock prices because each company has a different book value. Okay? Each company has a different way of dividing its capital into number of shares. Ilang shares outstanding ba yung isang company na to? Ito, ilang shares outstanding. You cannot compare stock prices. They are just numbers to describe the value. Okay? So, how you should do this is to make them comparable first. That's the purpose of the multiple. The purpose of the multiple is to make them comparable first. Okay? Kung binibili mo yung earnings ni target company 1, $2 yung earnings niya. Kung binibili mo yung earnings niya, nagbabayad ka ng 20 times ng earnings niya. Kung binibili mo yung earnings ni target company 2, which is $5, magbabayad ka ng 50, you're paying 10 times the earnings per share. Target company 3, you're paying 15 times the earnings per share. Target company 4, you're paying 14 times the earnings per share. Excuse lang. Okay, let's continue. So as I have told you, ang pwede natin gawin dito, i-compare natin kung sino yung mura sa kanila. Ang mura sa kanila ay si target company 2. You're only paying 10 times the earnings per share. You're only paying 10 times the earnings per share. In the real world, however, the target companies are not identical with one another. Sa tunay na buhay, hindi porket parehas silang target company, magkaparehas silang magandang company. Some target companies are cheap because they are poorly managed. Some target companies are expensive because they are well managed. Okay? But for the sake of academic purposes, we just assume that they are equivalents. If they are the same, all else equal, we want a cheaper alternative. Kung gusto mong kumita ng 5 pesos per share, ang pwede mong gawin ay bilhin mo si target company 2, 50 lang ang babayaran mo, you're only paying 10 times its earning per share. Okay? Si target company 1 mukha siyang mura kasi $40. Pero EPS niya 2. So sa bawat EPS na binibili mo, nagbabayad ka ng $20. Okay? So target company 2 is the cheaper alternative. That's how you do it. So very good. Maraming sumagot ng boy. Okay. Marami naman sumagot ng boy. Letter boy. Okay, any questions? Any questions so far?